what's up, y'all? What's going on? What's going on? Hey, how y'all doing? Listen, I had to come live to try to get a good understanding of what's going on, okay? With this crypto thing, okay? We talking about FTX and how they lost how many billions of dollars within a night? How many billions did 32 billion valuation and a fire sale in 11 months? How did FTX lose that kind of money? So the guy Sam Bankman-Fried's $15 billion crypto fortune. FTX is facing a liquidity crunch that could wipe out investors that include Tom Brady, Sequoia Capital, and Tiger Global. I want to know what all this means. I'm going to try to break it down for y'all because I got a good understanding of what's going on. Now, FTX is a company that kind of transfers your money from your bank into crypto and then to another service. For example, if you wanted to take your money out the bank, right? And you using the US dollar, right? In order to convert it, we use companies like Coinbase, Crypto.com, Binance, FTX. FTX and Binance were, to me, the biggest companies they had that transferred your money out of your account, right? But wait a minute. We always learn, and let me give y'all some tea before y'all go any further. We always learn never store your money in those transfer companies. Never, 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 right? And that's why you open up a wallet, your non-custodial wallet, right? The non-custodial wallet is not traceable. It's legal. It's not traceable. And they give you a group of words, right? Like 50 words for your wallet, right? And now we call Coinbase and FTX, we're going to call it FTX if it's in existence anymore, and Binance a hot wallet. Hot wallets mean that you have no control over that money. You have no control, just like the bank. You don't have no control over your money, your mutual funds, your 401k. You ain't got no control over it. But in a sense, Coinbase and all those things just transfer your money out of the bank and put it in crypto, right? So FTX was a way of putting your money in crypto that was less than, meaning cheaper than, to transfer your money. Because to me, Crypto.com charged 2 times as much, and then Coinbase was a little bit more expensive. But if you were transferring big money, you use FTX to transfer your money into crypto and then to another space, whatever you were doing with your money, right? Evidently, some kind of way something went down, and I'm going to go ahead and break it down for y'all because I get the reports from Business Insider. But basically what happened was there was a tweet. This all started with tweet. Twitter is powerful, right? Tweet. Somebody from FTX, I want to say one of the leaders, right? They tweeted that FTX was FDIC insured, right? Which was a lie. That ain't true, right? They said it was a mistake. They put it out there. But the FDIC placed a cease and desist order saying you cannot say that it's backed by, you know what I mean, us, because we don't back it, right? We don't back it, right? So anyway, from my understanding, what happened was when they put that tweet out and the FDIC filed the cease and desist saying they're not insured by the FDIC, they went into further investigation of FTX, right? So FTX was funded a lot by a lot of different people, but by the way of Binance. Binance is another company that trades crypto from cash to whatever, so it's like a transfer company. You can buy crypto in these spaces, but we're always told from the very first time I started trading crypto, they said never, never, never leave your money in one of these spaces. Always get you an outside wallet, get you a non-custodial wallet, right? We knew that from the very beginning. Let me give y'all a little bit more tea. So what happened was when they said it was FDIC insured with Twitter, they filed, a cease and desist. So people started investigating FTX. Binance was being paid by FTX in their own token. FTX had a token called FTT, if I'm not mistaken. FTT, and it was paying a lot of its money with the FTT tokens, right? All this is digital money. Tokens is not tangible. It's all digital money, right? So Binance said, listen, y'all under investigation. This is what I'm getting at. I'm making a long story short, right? FTT, right? They said, listen, we want to cash in all our tokens, right? from Binance. Binance is they were competitors, they big, but you know, they were working together. And so they were getting paid by their tokens FTT, which is good money. That's just like, you know, used to be. So when they found out they wanted an investigation, it scared Binance. So Binance said, listen, we want our money back, but you've been paying us in tokens. Let's cash out these tokens. We want our money. So many billions of dollars was traded back to Binance. And they had some other indiscretions, problems with their partnership anyway. So they wanted their money back, right? So that took FTX from being billions and billions of dollars, like they say 32 billion or something like that. Let me get my numbers right. Down to $1 billion. 1 billion, one. That sounds like a lot of money to me, but 1 billion. 1 billion ain't a lot of money when you're talking about 32 billion. But my whole thing is everything's relative. I always say that, right? So now they saying that FTX was filing bankruptcy. So they went to the banks to try to get a bailout. You know how the banks get a bailout, right? Bailout. So the newest news, this came out yesterday, I believe, because this is when I heard it yesterday. FTX said that they've been hacked, okay? They've been hacked and the people is leaking the money and the money is gone. Now, to me, I ain't saying nothing, you know, I'm on live and, you know, I don't talk about people, but if you just filed bankruptcy because somebody made you return the money from all their tokens, meaning you lost billions and billions of dollars. Now you down to 1 billion. You filing bankruptcy trying to get a bailout, right? And now you've been hacked and all your money is gone. So the people money that were storing their money in FTX, which we never recommend, that ain't, you know, crypto, that's one token of crypto, which was pretty big and it was pretty powerful, but it wasn't Bitcoin. So I said all this to say, there are 3 different types of wallets, right? Y'all take this. This is going to be evergreen for y'all because it's a lesson forever. There are three different ways you can store your money. There's a hot wallet, right? A hot wallet is Coinbase, Voyager. Voyager went out of business. Coinbase, Crypto.com. Used to be. FTX was a great way to transfer your money from one location to another. Take your money at the bank. You transfer it to FTX. FTX puts it in crypto, or you can, you know, but never, we learned this from the very beginning. Never store your money in Coinbase because they're hot wallets, right? A warm wallet is your own non-custodial wallet, which is your own bank. This is your money. You control this money, right? So a non-custodial wallet, we're talking about Exodus or MetaMask. They got different non-custodial wallets out there, but that's your money. Meaning it's not identified by a username or password. They give you a group of words, probably 2, 3, 4 factors to prove that it's you, right? But usually it's a group of words, right? You're supposed to write these words down and put them in your fire safe or whatever. Some kind of way you got to keep these words, because if you lose these groups of words, you lost your money. So that's important, right? So a lot of people take the words, write them down, print them out, put them wherever, so they have forever. That's the only way you can identify your money, right? That's a warm wallet. Now, what they call as a cold wallet is a ledger. Now, if you ain't learned nothing else about crypto, you need to learn this. Get you a ledger. What a ledger does, and I got an example of a ledger, right? You download your digital money onto a ledger, right? This means your money is offline. There's no way we can hack it. Let's we get this ledger now. We can't hack your money because we got the ledger. Get your ledger. It don't even cost that much. Whatever it is, you take your digital money. All this is digital, right? Put it on a ledger. This is a cold wallet. Hot wallet is companies like Coinbase, FTX, Binance, or whatever. You have no control of your money. Look at Coinbase. They hold your money now at random. Because we were using Coinbase and they would transfer your money. If you had a relationship with them, you could get your money out quickly. Now they holding it 8 days, 14 days. Go do your research. So they holding your money at random, just like the airport do checks on you, whatever. They thinking that people laundering money. So they hold your money for 8 days, 14 days, whatever. But while they're holding it, please understand, they still trading your money in the Forex market, the foreign exchange, which ain't got nothing to do with crypto. But a lot of people trade with crypto in the Forex market, right? So now, if you don't get nothing else today, Coinbase, Binance, FTX, used to be FTX. I don't know what it's going to be after today. They were ways to transfer your money. You never store your money in this, right? You store your money in your non-custodial wallet. You have control over your wallet. Nobody else does. That's your money, you, your bank, right? But you're still hackable because it's still online, right? What you have to do is get a ledger. This is a cold wallet, a ledger. Take your money, your digital money. It's not tangible. You'll never get a Bitcoin. I always say money is an illusion because you never see it, right? Right? But put your money on a ledger. It's offline. It's not hackable. And I know people hack because they tried to hack me one time with Coinbase. They called me saying that you need to give me your number. It was a text and it seemed fishy. So I called Coinbase, the real number that I got from Coinbase, and they said, no, lock your accounts right away. So it's a lot of hacking going on. It's probably going to get worse. So if I tell you anything, this is kind of stuff we teach at DrHeavenly University, and we talk about in the Heavenly Investment Group as well. But DrHeavenly, how to protect your dang money. Because if you're going to invest in crypto, crypto ain't gone and it ain't going nowhere. Bitcoin ain't gone, it ain't going nowhere. Binance and FTX had a problem. There was a tweet sent out. From my understanding, Binance got nervous. They started investigating. Found out that the FTX wasn't as liquid as they wanted to be, so they transferred their tokens out. A token that was created by FTX, which was FTT, right? Pulled out 32 billion, whatever, 31 billion or whatever it was, leaving FTX with $1 billion. Yesterday, they said they got hacked. Now it's under full investigation, probably bankruptcy and all of that. So the people that had their money in, that ain't got nothing to do with crypto. And I'm going to tell you one thing too. The platforms that we trade in, we still made money this week. So that just further tells you how solid we are. We ain't made 2 to 4%. I think we made 1.18 with all this going on because a lot of people weren't trading that well. We still made 1.18% on our money this week. Now, y'all go with that. Y'all take it however y'all want to. This is my 10 minutes, but I hope y'all learn something because I'm learning as we go too, and I'm just giving it to y'all as I get it. Now, if y'all got any questions or comments, please leave it in the description box because we got to learn this together, right? We got to learn this together. This is not affecting crypto. It's affecting FTX if you had your money in it. And people stopped buying crypto because they got scared because they really didn't understand what was going on. This is just two companies. I would say Binance is solid now. That's what my man tells me because they had all the money and they traded their money out and got 32 billion, 31 billion or some billion from FTX through their tokens. So FTX probably is no longer, they're filing bankruptcy, but that ain't crypto. Bitcoin's still live. And I would say to you, from what I learned, it's only a certain number of Bitcoin. It's 120 million Bitcoins. It's a limited number. Anytime you know it's a limited number of something, it's valuable. Get you some Bitcoin. Ethereum is unlimited. Ethereum is, if Bitcoin is gold, Ethereum is silver. And we can go into all that. Listen, this is the kind of stuff we got to learn. Forex trading, crypto, all that. DrHeavenly University. See about me. We're going to start our 5-day challenge really, really soon. And listen, join the Heavenly Investment Group. We got investments that still made money during all of this mess. Okay? The link's in the description. If it ain't, look on my last video. All my stuff is on there with everything on it. And I'll put the disclaimer because I'm not giving financial advice. I'm just telling you what I know and how I know it, okay? Y'all take care. Bye. I'm going to do another video behind this one. I want to talk about the election, though, okay? And my understanding of what's going on, okay? I'll see y'all later. Put your thing down there. This Spanglish, you need to learn it. That's right, the Heavenly Investment Group. Get at me. I'm going to do a 5-day challenge. People don't know this. And to me, professional people don't know. It's about to be a great wealth transfer. And y'all don't even know what's going on. See about me, okay? All right. I'll talk to y'all soon. Bye-bye.